Indian bonds are getting included in the JP Morgan GPI EM index. So, and many others. So, like Bloomberg local currency index will also include India by early next year. So, these global index inclusions that also might attract a lot of foreign flows into Indian bonds. So, overall demand side looks much stronger while supply is falling, and that's one positive backdrop for Indian bonds. The other side is the cyclical, where we have seen cyclical downturn in inflation. Inflation has been coming down for more than a year now. And if you remove the volatile vegetable component, which is 6% of the inflation basket, the rest of the 94% of CPI basket is much below RBI's target of 4%. So it's just about time that monetary policy will turn and RBI will start cutting rate. We don't know when they will start, but most likely we'll see maybe rate cutting starting from October or December of this year. So when RBI cuts interest rates, bond prices go up, and that's again positive for long-term bonds. So these two factors will remain a positive driver for bonds, while there could be some expenditure switching towards more demand boosting. But I think bond market will be driven by these two factors and respond positively only. Overall, from the investors' point of view, I think dynamic bond funds are probably the best place to capture this opportunity. Now, in dynamic bond funds, we have flexibility to change the portfolio allocation depending on the market environment or the outlook. So currently, as we are positioned positively invested more in long-term bonds, but if something changes, there is a flexibility with the fund to respond and reduce the portfolio duration or maturity immediately. So that makes this fund really favorable for the long-term fixed income investors. Investors who have shorter holding period, they can't tolerate much of volatility. I think liquid funds remain a best option. They should stick with the liquid fund. And they're also, given the overall liquidity situation and all, returns have been reasonably high for the last 1.5 years. And I think that will continue in future.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.